Good morning, students. I'm sure with the passage of every day, slightly the pressure may be mounting on you all. Yes, Bhumika, Mayank, Krishnam. Krishnam, you have joined from two links. You have joined twice. Jinang, Shaha, Swati. Who's this MM? Kindly put your name. Yeah. So students, I would like to first have an open discussion regarding your questions, doubts, if any, so that we can first take up your doubts and then we'll go to any particular topic and the schedule at hand for today. Yes, Ayushi. Students, so first let me know your questions, doubts relating to any of the topics in costing that you have been studying, revising. If something is troubling you, any concept. Yes, students. No one has doubts? Okay. Kindly just download the material that I have already shared relating to today's topic so that it will be easy for you and me to be on the same discussion point. Okay. So students, the topic that we are going to discuss today is cost accounts. Now, first let me know how many of y'all are aware of the cost accounting entries and how many of y'all do not recall the cost accounting entries, so that I'll first know from where I should start. Yes, students, can just if somebody give me inputs. Okay, Krishnam is giving thumbs up, so he is well versed with the entries. I don't know more in this concept. Ayushi says, okay, fine. Anybody else? I don't know more concept. Yes, anybody else? Just give me some input so that I should know from where should I start. So anyways, I'll take some revision also because it may be possible that everybody may not be well versed. Okay, Krishnam is now saying, yes, sir, I have forgotten. Actually, you have forgotten the concept of under or recovered, but beta, that is part of overhead chapter. It is not part of cost accounts. Chalo, theek hai. So let me first take you to cost accounts. Now see, in our regular financial accounting, right? Financial accounting that you have been doing since standard 11. So in financial accounting, the accounts that we prepare are broadly four: assets, liabilities, income, expenses. And on the basis of these four accounts, you prepare the financial statements in the form of profit and loss account, which starts from manufacturing, trading, profit and loss, and then your balance sheet, and then all types of cash flow fund, etc. Right? No worries, Krishna, that we'll discuss today. So, as far as the cost accounting is concerned, again, Bhumika, I'm assuming that when you are saying under or absorption, you are talking with respect to the cost accounting chapter and not the overhead chapter, right? Okay. So as I was saying, these are the four types of accounts in your financial books. But when we come to cost accounting, the accounting or the entries that we have to pass in cost accounting are slightly different from what we are going to have in our financial accounting. So let me first inform you what are the broad accounts. So the first account is your materials account. So As you have accounts for expenses in your financial books, here also we have account for expenses. But as you all know, under costing and cost accounting, your expenses are broadly classified into material, labor, and since the other expenses other than material and labor are mainly overheads, that is, they are indirect. So instead of having a direct expense account, we directly have the overheads account, which is then factory, administration, and selling and distribution. Fine. I hope you all recall this. Now, these are the generic names. I'm using the word generic, or I'll say these are the non-technical names. However, these have been given technical names, and the technical names are stores, ledger, control account. So in your exams also, you can write it like this: stores, ledger, control account dash SLC, so that henceforth you can use the short forms. But I'll recommend that if possible, use the long forms only. Labor cost control account, LCC, and then your production overheads control. So maybe we can just simply say FO or FOC. Administration overheads control, which is AOC, and selling and distribution overheads control, which is SNDOC, or simply SNDC, or you can simply take the short form SND. See, what short forms you have to take, what acronyms you have to take, that is your choice. So there is no need that it should be very much linked with the long form. You can take as per your choice. Fine, students. Now, to this extent, I'll say your financial and your cost accounting are similar. Similar in the sense, over there also you have expenses account. The only difference is over there the expense heads are purchase account, wages account, then your repairs account, rent account, your salary account, depreciation account. Instead of those expenses here, in accounts, we have expenses headwise. In costing, we have expenses element wise. Elements are material, labor, and expense. So that is why the difference in the account heads. I hope that is clear. Otherwise, both are same. Over there also, you will be recording expense in financial books. Here also, we are recording the same expense. It means there is a duplication of entry between your financial and your cost accounting books. Financial accounting will also record. So let us say you make a purchase, you'll record in the purchases account in financial books, and here you'll record in the SLC account. You pay wages, you pay salaries, you pay director's remuneration, all that in financial books you record in the respective account heads. Here everything is put in the labor cost control, that is the LCC account. I hope this is clear. Now the biggest differentiating point between your financial books and your cost accounting books is the next part. Now in your financial books, after recording all the expenses, what you simply do is you simply start posting the expenses whenever they occur on the debit side. So as you go on paying any expense in your financial books, so let us say purchase happens, you debit. Any labor related expense like wages, salary, or anything happens, you debit the respective accounts over there, right? And you don't do anything as far as the charging is concerned, because charging concept is not there in financial books. In financial books, we only have the posting or the debit. Now what you do in the financial books is at the end of the financial period, or whenever you want to close your books, either of the two. So it may be now, as you know, listed companies prepare and they have to submit their accounts quarterly. In some other cases where you need to prepare your accounts in between a period, maybe because there is some amalgamation, merger, or any of the reasons, you may close the books to that point of time. So whenever they close the books, what they simply do is they transfer the entire expense to the profit and loss account, trading account, as the case may be. This is where the difference lies between your financial accounting and cost accounting. So first part is same, both are recording expense, fine. Now in the second part, which is different, is in costing we have to do charging. Charging means now I have to not transfer the entire amount by P&L. I don't have to do that. Rather, I have to find out of my total material cost, how much cost is for respective products, for respective jobs, for respective batches, for respective contracts. And accordingly, I will charge that particular amount to that respective product, to that respective job, to that respective contract. How? By simply transferring it from this account to the respective product account. So what is the difference is, in case of cost accounting, we have a special category of accounts which is missing in financial, that is the product accounts. Now, we are preparing these cost accounts with the presumption that we are talking about a manufacturing setup. Now, in manufacturing, the product accounts, what we are now going to make, are divided into three categories. First is the product while it is under processing. So we have the WIP control account. I'm directly writing the short form. As you know, WIP is what? Once the production is complete and the product go to your stores after production, we have the finished goods control account. And when these products would be sold, that is from stores, now they will be delivered to your customers. For that, we have the cost of sales account. Sometimes our module only call it as COGS account. So don't get confused. COS, COGS are used alternatively. Now, after this, similar to your financial books, we also have the P&L account. But please remember, this P&L is prepared in the cost accounting books. It is different financial P&L. And so that you do not get confused, we call this as the cost P&L account. So like how your financial books are closed by transferring all expenses directly to P&L, the only difference is here, not transfer the expense directly to P&L. We will be charging the expenses to our products. Now, products are divided into three accounts. So depending upon where your product is, whether it is under processing, whether it is in the store in the form of finished goods, or whether it is sold to customer, accordingly, these expenses are charged to different accounts of the products. And at the end, whatever is the total cost of the product which is sold, which you will get from the COS account, that will be transferred to the cost P&L account. So this is how the cost accounting entries flow. Right? I have not yet explained the entries. I'm just giving you the broad perspective so that first we should have the outline. And like how when we prepare a drawing, you first prepare the outline and then you start putting the detailings and the fine printing or the painting and etc. Similar form. First, we need to understand the broad outline of the accounting. Now comes the most interesting and the most important part in cost accounting. What is that? If you see, as far as the purpose of cost accounting is concerned, that is finding out cost of each product, fixing the price, finding out profit of each product. All these are satisfied with these accounts that are in front of you. I don't need any other account to satisfy the objectives of cost accounting, which you study in the first chapter. What are the objectives? Finding out cost, fixing price, finding out profit, taking decisions, cost control, cost reduction. All these will be served with these accounts itself. But the problem is, I cannot pass the entries with these accounts. What I mean by this is, my dual entry concept of accounting, that is debit and corresponding credit, will not be possible with these set of accounts. Why? The simple answer is, let us say I make purchase. When I make purchase, I know I have to debit the materials account. But at the same time, I need to credit something. I need to credit some account to complete the dual aspect concept. Now, this other account, I'm sure you all would be knowing in accounts. If I'm making a purchase, so debit is purchase over there, here it is materials. Credit goes to cash, bank, or creditors. That is, I require those accounts head which are part of your assets and liabilities. That is the balance sheet. Correct? So here comes the difference. These all expenses, these all products, and finally P&L are sufficient to do my cost accounting. But to complete the dual entry, I will need those asset and liability accounts, which I will prepare henceforth. Now here comes two methods of cost accounting. The first is called as integrated, and the other is called as non-integrated. So the first is integrated, the other is non-integrated. Now, what is the difference? If you are preparing integrated set of accounts, integrated means you will have one set of books to represent both financial and costing. And when I say non-integrated, it means I'll have separate set of books for financial, what we have been preparing, all the books in financial, purchase register, sales register, everything. And finally, the general ledger, which have all the financial accounts like purchase, like wages, like salaries, like rent, like depreciation, etc. That will be the financial books. And I'll separately prepare this, which is the cost accounting books. That is what is non-integrated. Now, if you ask me, out of this, which one is the most commonly followed in industry, it is this one. And that is why in exams also, majorly, you have questions on non-integrated. But for academic purposes, we are just also studying or knowing what are integrated. Now, whether you follow integrated or non-integrated, up to this stage, all these accounts are going to be same, what we have just understood. What is the difference between integrated and non-integrated is only the right hand side. That is the accounts which I'm going to prepare over here. Now, when it is integrated, I will prepare separate accounts for each asset and liability. So now in my integrated books, besides these accounts of expenses and products, I will now prepare accounts for each asset and liability. So broadly, let us say I have my fixed asset account, which includes land, building, etc. I have my debtors account, the creditors account, then the cash and bank account, then the capital and reserves account. So I prepare separate accounts for each asset and each liability. So along with the expenses, the product, the cost P&L, in integrated books, you'll have these independent accounts. But when it comes to non-integrated books, see, please understand why I am requiring these accounts. These accounts I am requiring only to complete the second entry. That is the dual effect of each entry. So non-integrated says when you are preparing separate financial books, all these accounts are already prepared over there. Financial needs are over. You can prepare the balance sheet from there. So in non-integrated, I only need to focus only on my costing and cost accounting. And for costing and cost accounting, I do not need the balance of debtor. I do not need the balance of cash bank. I don't need the balance of fixed asset. But I need account to complete the dual entry. So what non-integrated people say, let me merge all these asset liabilities account and prepare one single account, which is called as cost ledger control account, in short CLC, or general ledger adjustment account, in short GLA. Please remember what it represents. These accounts represent debtors, creditors, all fixed assets like building, land, machinery, etc. Then your capital, your reserves, and most important, cash. These all accounts are represented by one single account called as cost ledger control CLC or general ledger adjustment GLA. You can use any of these names. This is the only difference between integrated and non-integrated. Now in exams also, how do you get to know the sum is of integrated or non-integrated? You have to see when they give you the opening balance, whether the opening balance includes opening balance of fixed asset, debtors, creditors, obviously along with the other left-hand side accounts, then it is integrated. And if they give you the opening balance of the left-hand side account and they give you the opening balance of CLC or GLA, or please pay attention, they give you the opening balances of the left-hand side accounts, but they don't give you any opening balances of this side. Then also it is the case of non-integrated. So integrated sum will be only when they give you independent balances of these accounts: debtors, creditors, capital, cash bank. So firstly, students, have you understood this broad structuring of the cost accounts and the two types of cost accounting systems, that is integrated and non-integrated? Let me first understand this. So let us first discuss on this. If anybody has questions, doubts, please let me know. Ayushi, Bhumika, Swati, Om, Kiran. Yes. Okay. Excellent. So till this point, it is clear to all. Perfect. That's great. So now let me proceed. Now let me take you to the entries. Now, what are the entries? Broadly, the first set of entries is when you incur any expense. So in the question, you would be given material purchased, wages paid, or overheads incurred. When these expenses are incurred, as we know in our cost accounts, sorry, in our financial accounts, whenever expenses are incurred, the entry is simple: expense account debit and credit is cash bank creditors. Same thing happens over here. So if purchases are said, then the debit is materials account, which is now SLC, stores ledger fund. Now credit is what? Credit is cash bank creditor, as the case may be. So this will be credit, or if it is on credit basis, this will be credit. So either you will credit the cash bank or you will credit the creditors. I hope this is clear. Same thing when some says direct wages, indirect wages are paid, you will debit this. Overheads incurred, factory, administration, selling, whatever expense are incurred, you will debit the respective expense account and you will credit cash bank. Generally, it is assumed that it is paid in cash bank. And if it is specifically mentioned that it is on credit, then you will credit the creditors. This is my first set of entries for which I say expenses incurred. Okay, students, wherever you have doubt in any of the entries which I'm discussing, please let me know. We'll stop over there. We'll discuss. Right? Anybody, any doubts in this? Chalo. Now, the second part is, pay attention. This is interesting. The second part is, now I have to do something which is not there in your cost accounting. Sorry, in your financial accounting. What is that? Now, when I say these materials are purchased in our costing, we have a segregation of material into direct and indirect both. Now, when any of these materials are purchased, the debit will be on this debit side of SLC account of material purchase, whether it is direct, whether it is indirect. But indirect materials, as we have studied in costing, where do indirect materials go, or where? What is the treatment of indirect expenses? They all form part of overheads. So what we do is the indirect materials would be transferred to your overheads. Now, how you'll know some material is indirect? Either they will say indirect material, or they will say material used for repairs, materials used for some type of non-productive work. So all that is what is not used in production is what is indirect. Similarly, for wages, on the debit side, you have both direct wages and indirect wages paid. So first, the payment entry or the incurrence entry is common on the debit side. But when it comes to charging, the indirect wages would again be transferred over here to factory overheads. I hope this is clear. When the question specifically says that some material is used for administration, some material is used for selling distribution, then only that much portion of material will be transferred from here to the respective overheads account. If nothing is mentioned, then the indirect material will only be transferred to factory overheads account. because generally indirect material is something which is used in the factory, and similarly indirect wages is something which is used in the factory. Clear, students? So now after incurrence of expenses, now we are doing the charging part. In charging, we are first discussing the charging part of indirect. So indirect would not be charged to the product accounts. They would be transferred to the respective overheads account. Generally, it is factory overheads. Any questions? Any questions? Any doubts? Perfect. Let us proceed. Now comes the interesting part. I'm just rubbing this to avoid a lot of confusion. Now, whatever is the direct cost of material, that is direct material, which will be called as material consumed, material used in production, that will be transferred from your material account to the WIP account. Obviously, direct material means raw material, which is used for the purpose of manufacturing a product. So it is used while the product is under production. So that is what is charged to WIP. Achha, I'll give you an interesting concept just for understanding. So when you say WIP account, remember it is the physically it is the factory. When you say finished goods account, remember it is your stores. And when you say COS, remember it is the customer. This will help you understand the entries easily. Fine, students? Now, pay attention. So, when we have to proceed further in this, now comes the part of charging these expenses. Fine? Now, when I'm saying charging, so whatever material is consumed for production, what we call as direct material, will be charged from material to the WIP account. Similarly, whatever is the direct wages will be also charged to the WIP account. Why? Because all these are the expenses which are incurred for production when the product is in the factory. I hope this is clear to all. Fine. Now, most important part where generally I find students have generally a confusion. If you don't have, that is well and good. When they say factory overheads or production overheads is charged, where this production overheads will be charged, again it will be charged to WIP because production overheads are incurred in factory. That is why they are called as factory overheads. That is why they are called as production overheads, right? So they are, or these expenses are incurred in the factory. Fine, students? Now, the other two overheads, that is the administration overheads, it will be charged to the finished goods account, and selling and distribution overheads will be charged to the COS account. Is this clear? Okay, great. Perfect. Any questions, students? Om is saying it is clear to him. I hope others are also clear with this. Yes, students? Great. Super. So now I have charged all expenses. Indirect are charged to overheads. Direct are charged to the product accounts. Right? Now I have a question. Admin expenses related to production should be charged to WIP. Perfect, beta. If it is specifically given in the question that the admin expenses are related to production, you should charge it to WIP. I purposely did not take that now because it is something which is very odd. Rarely it comes in any question. So, but your point is right. I'm first going by the general entries, right? Perfect. Now coming to the interesting part. So here it is production overhead charge. Now, since this is a WIP account, you also would be having opening WIP given in the sum. And then comes the most interesting part. where the sum says production completed, finished goods completed, or finished goods transferred to stores. For all these things, wherever it is finished goods completed, finished goods transferred to stores, your entry is now that much quantity is going outside your factory to the stores. So whenever they say finished goods completed, production completed, or product at cost, it means they are talking about finished goods which are now completed in terms of production, which you will transfer from here to here. So finished goods. See, I'm not writing the entries, so I'm not writing the account heads. I'm writing the concept. What exactly is flowing? Account heads, debit and credit. So don't mistaken that what I have written is the account heads. These are not account heads. These are the flow of transactions that are happening. Be clear, right? So finished goods which are completed will be transferred from WIP to finished goods account, and then you will have balance figure as closing WIP. Correct? Now, in some other sum, it may happen that closing WIP is given. Please pay attention, students. In some other sum, it may happen that closing WIP is given. So this finished goods completed will be your balancing figure. These are some special adjustments. Now I'm taking the liberty of explaining even these entries directly upfront because you all would have solved these earlier also in your regular classes and then practice at home. So now you'll be able to connect with this fast. So generally your WIP account will have these entries: opening, direct material charge, direct wages charge, production overhead charge, finished goods completed, and closing WIP. This is the end of this. Right, students? Perfect. Any questions, doubts? Similarly, finished goods again will have opening finished goods balance given in the sum. And then you will be given the entry of cost of goods sold or finished goods sold at cost. See, these are the different terminologies used. It is simply active voice, passive voice of English. So finished goods sold at cost. Yeah, cost of goods sold. That would be transferred from finished goods to the customer. So it is going from your stores to the customer. That is why the entry is the cost of goods sold is transferred from finished goods account to your customer's account, which is over here COS. Again, you will have closing FG and this account is closed. Now again, if they have given closing FG, this you will get as your balancing figure. Perfect, students. I hope this is clear. Everybody is getting this and there is no doubt up to this point. Now, in your COS account, which is the customer's account, you have the cost of goods sold, and logically to this only you would have charge, selling and distribution, because whatever is the cost of goods sold, to that only you can charge the selling and distribution. This becomes your total cost of sales. In simple words, total cost, which at the end of the year is transferred to your cost P&L account. So cost P&L account will have COS the debit side. Now, we require sales also. Now, this sales will be given in the sum as sales or finished goods sales. You have the credit entry here, where from this debit entry will be flowing. Now, for debit, obviously the sales, if they are made on credit, then debtors is debit. If the sales are made for cash, cash and bank is debit. So, broadly, the entry for sales which is given in the question would be debtors debit, cash bank debit, whatever as the case may be, and your cost P&L credit. Perfect, students. Now, we close the expense accounts also. Now, in expense account, the first is material, which is raw material. So you will also have opening stock given of raw material. So you will get the closing stock of raw material as the balancing figure, and this will get closed. Again, if this is given, then generally in material account, if this is given, these are generally given in the sum, then what you get is the difference of abnormal loss. Or many times they will give in the sum that so much of material is lost because of fire, because of theft, because of any of natural calamities. So that is the amount of abnormal loss. It will be credited here, ABL, abnormal loss, and it will be debited to cost P&L. Same thing when we come to labor. Now, labor generally never has an, generally means never labor can have opening balance because labor cannot be stored. So you have expenses incurred, you have expenses charged. That's the end. But again, if something like abnormal idle time or something is given, that would be credited here. This account is closed. And again, that abnormal loss would flow here. So the entries are, since it is an abnormal loss, it will come to your cost P&L debit side, and the respective expense account, which may be material or labor, are credited and it is closed. Fine, students? Now comes the point for which at the start, many of you all said, sir, we have confusion. Okay. I know what the confusion is and why the confusion is. So for that, let me first make you understand that first I passed the debit entry. Debit entry was for factory overheads incurred, administration overheads incurred, selling and distribution overheads incurred. This was a debit entry. Against that, you had the credit entry of overheads charged, and overheads charged. Correct? Now, in certain sums, you may also be given opening balance of factory overheads, opening balance of administration overheads, and the opening balance can be on either of the sides. Now, let us first understand what does the opening balance in overheads account represent. Generally, opening balances, or I will use the word balances in overheads account, may represent things. First, it represents the outstanding or prepaid. So if you have any outstanding overheads, that is of the last period, there was some outstanding overheads, so it is yet to be paid, right? So that will appear, since outstanding is a liability, so the opening balance will appear as a credit balance. It can be of any of the three accounts wherever there was outstanding. So opening balance credit represents the outstanding of the past period, which you are carrying forward, which you may be paying in the current year. Fine. Similarly, if the opening balance is of prepaid in the past period, the opening balance will appear as a debit. So debit opening balance will represent prepaid of the past period. Credit opening balance will represent outstanding of the past period, and it can come in any of the three accounts or all the three accounts as the case may be. I hope this is clear. Now, this is the first reason why you can have openings. The second reason could be the difference between this, which is the under over absorption. Link it with your overhead chapter also. In your overhead chapter also, we had the difference between overheads charged and overheads incurred. At the end of that chapter, we had the part called as under over absorption, where charged and incurred difference was called as under over absorption. Correct? But what is confusing? Can you please unmute? Is it still confusing, Kiran? And if it is confusing, please unmute and ask your question so that I can be very specific in my answer. I know it is slightly confusing, but I will make all my attempt to clear it. So I come back. So the opening balance, one, could represent the outstanding prepaid. Two, it could represent the difference in the past period of under over absorption, which is carried forward. Now at the start, when I asked that whether you have any doubt, few of you all mentioned that, sir, we have doubt about the treatment of under over absorption. And I know why the doubt is. The doubt simply is sir, in certain sums, whenever there is under over absorption, when you are closing these accounts, they do it as balance carried down. And in certain sums, they transfer that under or absorption to cost P&L. So I'm sure that your question or your doubt would be, okay, sir, now when I'm closing these accounts and if there is under or absorption, what should I do? So let me take example. So let us say I posted all these entries. Now the difference between the debit side and credit side represents under over absorption. If it is under absorption, the balance is on credit side. And if it is over absorption, the balance is on the debit side. Now you need not tag it whether it is under or over. That is not required here. But the point is this balance, which is on the credit side, that is the debit side is heavier. So my balance is falling on the credit side. Or here in this case, I'm assuming my credit side is heavier. So the balance is on the debit side. What should I do of this balance? There are two treatments. One, it becomes your closing balance. That is, you do carry it down. Or two, you will transfer it to your cost P&L as under absorbed factory overheads. Similarly, again here, one can be closing balance carried down. Or two, you will transfer it to cost P&L as over absorbed administration overheads. Now, this is the first reason I believe, or this is the first area of confusion I believe in this under or absorption treatment. And I'm sure what your question is sir, what to do? That is, when should I transfer it to cost P&L and when should I carry down? I hope this is your question. This is your confusion. Yes, students. Whoever had mentioned, sir, we have doubts in under or absorption treatment. Is this your doubt or question? Mika is saying yes. Yes, others, please let me know what is your, when you said at the start of this lecture that you have some doubts. So is this the doubt? Yes, sir, what should we do of this balance at the end of the period? Whether it should be transferred to cost P&L or whether it should be carried down. Is this the doubt or the confusion that you are having, students? In the starting, you all mentioned to me that you all have some doubts and confusions. Okay. Now the answer is, please pay attention. The first answer is, many times in the question, they will mention the balance, the overheads, that is the under or absorption, has to be done this. If they say transfer to P&L, you transfer to P&L. If they say carry down, carry down. Perfect. But many times they don't do this. The question is what to do then. Now pay attention. Check whether the question is for the whole year or it is for 1 month or 1 quarter. That is part of the year. If the question is for whole year, that is the end of the year question is there, you are preparing your books and closing the books as on 31st March, that is the end of the financial year, you should transfer it to cost P&L. This is the general. And second, if the question is of 1 month only, let us say they have asked you to pass entry for the month of June, or they have given you that you are passing entries for the 2nd quarter or the 3rd quarter, and it is not the end of the year, then general is you carry forward the balance of under or absorption. So where the question is not specified what should be done of the difference in your overhead account at the end while closing, you should check the sum, whether the sum is of year end or it is of in between the year. Year end, transfer the balance to P&L. In between the sum, carry it forward, and in whatever case, whatever you are doing, put a note at the end. Please remember, students, at this level, our institute accepts answers. If you check our past exam questions or your MTP, RTPs, whatever are there, in the solutions, for many cases which includes costing, for many cases which includes accounts, for many cases in FM, you will find in even in taxes in some cases, you will find that they say alternative solution. Why alternative solution? Because at this professional level, there are many scenarios, many possibilities where there are 2 or 3 alternative views possible. And when the question is not defining the exact scenario, you can take one of these views by putting it as your note that, okay, I'm assuming this, and hence I'm passing this in. I hope this is clear. The treatment of under or absorption or the treatment of difference. Yes, students. Let me know now what are your doubts further. I'll request if possible unmute, because then it is easy for you all also to ask and I will also understand you better instead of the chat box. Yes. Anybody would like to unmute, you may raise your hand. I'll unmute you so that you can be more specific in your question. Oh, hi Srini. I was missing you. I did not know that you are there. Let me just unmute you. Yes, beta.
Hello, sir. Good morning.
Good morning, beta.
Yeah, sir, when we are doing it monthly and while analyzing, sir, monthly, under absorption
Monthly.
or over absorption, yeah, monthly. At the end of the year, whether we will be making any separate entry for analyzing it, or it will be
separate entry for
analyzing that monthly transactions, because annually we need to close the accounts. So
see, the only difference, beta Srini, is if it is annual, you transfer it to P&L, and if it is monthly or quarterly, you are carrying it forward. So that is the only difference. There is no other separate entry for that, beta.
So annually, whether we need to make any entry, if we are doing monthly, separate entry we need to make.
But I think your voice is slightly not clear. Can you just repeat, please?
Sir, while we are closing the accounts annually, and we are preparing costing monthly.
Okay.
Whether we need to make a separate entry while closing the accounts annually?
No,
because we are maintaining a monthly, no, sir. So with the adjustments we need to make it.
Understand, beta, one thing. When you have done costing monthly, please understand this. In this whole cost account, let us say, for example, I'm talking about factory overheads account. These entries are not happening once. Like overheads incurred, this entry will be happening regularly when you pay. And as you know, we pay expenses frequently. So whenever you are paying, this entry is getting repeated again. Similarly, like you are saying, I'm doing costing monthly. I'll say maybe you are doing costing daily or even weekly. That depends upon the nature of your business. So whenever you are doing costing, you are doing this entry here. Overheads charge, overheads charge, overheads charge. So practically, this is not one entry. However, since we are preparing accounts for a period as a whole, so in your sums, they are giving you one figure for overheads charge, one figure for overheads incurred. Actually, it is never one figure. It is figure which is repeating again and again and again. I hope now you'll understand better. I think your answer, your question will be answered better with this.
Yeah, so we won't make any separate entry at the end of the year, right, sir? Because
not
we are
required,
making monthly
not
entry,
required,
right?
because even if you have done monthly costing, this charging entry is coming monthly, correct? Na? This factory overhead charge will come monthly. So there will be 12 entries in the whole year. And then at the end of the year, you find this difference, which is for the whole year, correct?
But if there is any difference in the calculation, whether we'll make any adjustment?
See, beta, there will be no difference in the calculation because this side will come from your cost sheet only, na? So whatever you have been doing in costing, that will be put on the credit side, because see, the credit side of all expenses is the figures which are charged, correct?
Yes, sir.
And charge figures you are getting from cost sheet only.
Yes, sir. Yes, sir. Thank you, sir. I got it, sir. Thank you.
Perfect. Yes, students. Anybody else? You may raise your hand. I'll unmute you so that you can be more specific in your questions. Perfect. So I think I have addressed all your questions. Whoever had these questions, whatever questions you all had. So then let me just now take you to sums. I've already asked you to download so that it becomes easy for you all to read the sums in your books. Somebody is asking, sir, I don't know how to get So don't worry, na. 1 second. I'm not able to read your chat. I'm don't know how to get cost profit from accounting profit. But that is next part. That is the part of reconciliation. You'll have to wait for that. First, we are doing some sums on accounting part, Ayushi, and then we'll go to reconciliation part. Fine, beta? Okay. So let us switch to sums. So the first is a very basic sum, just as an introduction. So as you can see, you have opening balances, and then you are given the entries or the transaction that has happened for the year. Now, first you have to identify whether the question is of integrated or non-integrated. That to come to know from the opening balance. So if the opening balance has the balance of cost ledger control, that is a CLC or the GLA, it will always be non-integrated. In fact, even if this balance would not have been given in the sum, let us say they have not given this opening balance, still it would be a question of non-integrated. Now you will say, sir, if this is not given, then how will we find this balance of CLC? Because we want this balance as a starting balance. The answer is simple. You are given the other ledger accounts. Just make a total of these three ledger accounts. The total of these three ledger accounts is always the balance of your CLC. You can just cross check now also. Make a total of these three ledger accounts. The total of these three ledger accounts will or has to match your CLC because we are following the double entry concept. So this is one way to identify whether the question is of integrated, non-integrated. The question is of integrated only when, see, when the question is of integrated, you will always be given opening balances like this, in which you'll have opening balance of these accounts like bank, like debtors, creditors, fixed asset, capital. These opening balances will suggest that the question is of integrated. So first step is identifying whether the question is of integrated or non-integrated. I hope that is clear. How to identify which question it is, right? Now, let us go to our first question. To solve the question, we need to first prepare ledger accounts. Now the ledger accounts, now I'm telling you something from exam point of view. Many times I've seen students carrying pencil, scale, and trying to be very neat and clean under the disguise of making a good presentation. So let me first explain you what is presentation. Presentation has nothing to do with very proper linings or drawing proper tables and all. Not required. Please be clear with the students. Don't waste your time in drawing lines or drawing these tables and all. That is not carrying any marks. And if you don't draw it, it will not lead to any deduction of marks. Please be clear with this. This is a very, very big misconception about presentation created by different people in the industry, but that is not the requirement. So then, the first step is you can prepare the ledger account with your pen like this. So when I say stores, ledger, control, account, SLC, simply with my pen, I'll draw a T. And this is accepted. No marks deducted for using your pen and simply drawing a T. You need not draw separate particulars column, amount column, making two lines on the top to give the heading. Not required. Please be clear. Don't waste time in exam. Please start drawing and preparing these along with me so that you can also do the accounting along with me. Now, students, I'll request that by the time I'm doing this, you start writing the journal entries at least, so that you all are ready with the answers when we discuss. Now, since we are following non-integrated, I will prepare cost ledger control account, CLC. So students will first prepare all the ledger accounts, leave around 6 to 8 lines as a standard. That would be sufficient to pass all the entries. Fine. So these are my ledger accounts. Now I start with posting the opening balances. So SLC has 35, 38, 25, 98. 35, 38, correct na? 25 and 98. Fine, students. Now, I'll request you all to post entries. You can use short forms. Short form to the extent of only using the first word. Like if it is SLC, you can simply say S. So if you want to say stores ledger control account debit and your CLC credit, you can simply say SC. I'll understand. So if possible, let's do that. So now for raw material, the transactions are purchase, return to stores, issued to production, return to stores, right? So for purchased, what would be the entry? So you should recall the entry of accounts. If it is not possible to directly pass the entry in cost account, recall the entry of accounts. Just change the account heads with the names of the costing account heads. Yes. So you're right, Swati Beda. Yes, Srini, you're right. I think you have a typo error, Srini, but you're right. So it is SLC to CLC, that is stores ledger to cost ledger control account. Correct. 95. Chalo, give me entry for the second one. Huh? Give me entry for the second one. Directly, if you are not able to pass the entry, you can first think of the accounting entry for that and then switch the names. Good. Now, what is the second transaction? Now see, first is purchasing, obviously from supplier, though not mentioned. And second is returning to supplier. So second entry is exactly reverse of the first. These are purchase returns. So when it is purchase returns, you will debit the supplier and you will credit the stores. Now, who is the supplier? We have all debtors, creditors put in the form of CLC. So CLC is your supplier, CLC is your customer, CLC is your asset, CLC is your capital, everything is CLC, correct? So now my material is going out. So in material account, I credit. And who is getting this material? Material is received by my supplier. So supplier account, which is here, is credited. Give me next entry. Materials are issued to production. Now this represents which material? This represents a direct material. Now issued to production, the entry would be good, Bhumika, Swati, perfect. Others also give it a try. Kiran, I think you have posted some other entry. We are still on material beta. So yes, Ayushi, you're right. Shrini, you are right. Perfect. So students, it's going great. So 98,000 by WIP to SLC. Chalo, next entry. See, these are all past exam RTP questions. So whatever you are doing is the same thing what you have to do in exams. Good. Om, Swati. That's right. Ayushi, right? So basically this is what? Whatever material you issued to production, out of that, some materials have been sent back. Maybe they are not as per quality, or maybe after completing the production, the requirement of the production department is over. So they have returned back the material to stores. So now the material entry would be exactly opposite of what you passed here. So it is now exact reverse entry, correct? So materials have come back. So your stores is debited. And who has given you material? Factory has given you material. So factory will be credited. Fine, students. Chalo, next entry. Now pay attention. For labor, you have to always club both the wages given. Now for labor, you pass both the entries with this one transaction, incurred also and charged also. Now for incurred, my entry is expense debit. So expense is my LCC. So LCC, that is labor cost control, is debited, and credit is my cash bank, which is represented by my cost ledger control. So the entry is '65. It is. Is it fine, students? Yes, correct. Om, your first entry was wrong. Second entry is, what is WC, Om? Do you mean to say labor is WC or representing W means labor? Acha, wages. Okay, good then. Correct. Now, this is the entry for incurred. Now I will be passing the entry for charged. Remember one thing, students, for labor, the transaction is given once. From that transaction, you pass the entry for incurred also, you pass the entry for charged also. Now for charging, the direct part of labor or wages will be charged to my WIP account. This represents the direct wages. And the indirect wages, I have to transfer to my factory overheads account. So this represents my indirect wages, right? So what are the values? 40 and 25. So 40,000 is direct, 25 is indirect. And see, this account is closed here itself. No further entry is required. There is no difference because both incurred and charged are same. Is it fine, students? Good. Chalo, pass other entries. Correct. Yes, yes, I understand, Swati. You're right. Om, you are right. Right, Ayushi. Bhumika, right. Great. That's nice. So factory overheads incurred. Now I'm passing entries together. Selling administration incurred. Now here, interestingly, they have clubbed selling and administration. So you'll have a single account for selling and administration. So I just changed the name. It is selling and administration overheads. So this account is not required here. Fine. Now incurred is 2 CLC. 2 CLC amounts are 50, 40, 50, 40. By factory by selling and administration overheads control. Fine. Great. Right, Om. Now, give me entry for this. No, Ayushi. See, first understand the transaction. From where to where the goods are flowing. No, Swati. Yes. So what will be the entry for finished goods? So it is flowing from factory to stores. That is to go down. Swati, it has to be the other way around. But still it is wrong. Om, you are right. Yamini, beta, it is the other way around because factory is the giver and stores is the Yamini. So it has to be the other way around, Yamini. No, Bhumika. SLC, how SLC will come? Ayushi. Bhumika, where is the role of materials? These are now finished goods. So how will SLC come into picture? See, this is where we need to be clear. The entries are simple. Actually, we don't understand the transaction. So it is finished goods transferred to warehouse. So who is transferring to whom? So as I had explained earlier in my graph, once the finished goods are produced, they are completed, they will be transferred from the factory to the stores. Now factory is your WIP, stores is your FG. So stores is getting, so FG will be debited and the factory is the giver. So factory will be credited. So entry is finished goods control debit to WIP control. Yes, Swati, correct. Amount is 213. I hope it is clear. So mainly please understand what is the entry. That is a transaction. Once you understand that, understanding this will be simple. Then comes cost of goods sold. Now this represents the goods which you have sold. That is in our accounting language, it is sales, but it is at the cost price. Now when the goods are sold and it is representing the cost side, it means now the goods are going to be transferred by the stores to the customer because they are sold. So customer is the receiver. So we will write to FGC, which is the stores who is the giver, by COS. And the amount is 210. Right, Bhumika? See, they will generally never give this entry in the question. That is the final amount of cost of sales. That is what you do by yourself. They will always give you this entry in the question. So when they say cost of goods sold, it represents the transfer of goods by the stores to the customer. That is COS. I hope it is clear. Fine, students? Super. Now the entry for sales. By CLC because we want debtors. Correct. Swati. Right, students? Now, what else is given? Further, the question says factory overheads are applied. Applied means charged at the rate of 150% of direct wages. So factory overheads are charged using the overhead charging rate of 150% of direct wages, and your direct wages is 40,000. So 150% of 40,000 will be 60,000. Now what will be the entry for factory overheads charged? Can anybody tell me? Good. Swati? Anybody else? What will be my entry for factory overheads charged? Correct, Om? Anybody else? Ayushi, not correct. See, where do I charge my expenses? See, CLC account is only used for incurring of expense. Charging has to be done with some of the product accounts. So factory overheads is an expense required in the factory. So I will be charging it to the factory account, and my factory account is this: to factory overheads control, 40,000, which is the direct wages, into 150%. So it comes to 60,000. And my factory overheads is saying by WIP 60,000. Yes, Ayushi, you're right now. Fine, students. Now, what they have said, any under or absorption has to be carried forward. So for factory overheads, they have already given you instruction. And for administration and selling, they said it is a period cost. So period cost means it will be transferred to P&L. So they have already given you what to do of which item of expense. So we know where to transfer what. Correct, students? Right? Now, we start closing our books. So we start with the material account. Now material has your opening balance. It has purchases. It has goods sent for production. It has returns to supplier. It has returns from stores. So now we have all the entries posted. Now what I will get is my closing balance. Correct? So it is 130, 133. Now 133 minus this is correct. Now here they have already given you instruction. Whatever is the under or absorption, that has to be carried forward. So I have 75,000 on the debit side. Credit side I have 60. So my balance carried down is 15. This they have specifically asked to transfer to cost P&L. This I have closing balance. Correct. This again I'll have closing balance. This will always be transferred to cost P&L. So second effect of this, second effect of this. Correct? I hope the entries are clear, students. Any doubts with any of the entries, students? Yes, students, all clear? Should I proceed? Good. This account, super. I will get my profit or loss. So on debit side, I have 210 and 40, so it is 250. Credit side, I have 3 lakhs. So I get my figure of net profit. But it has to be posted somewhere. Again, where it will be posted to the capital and the reserves account, which is represented by CLC. And this balance will go to my CLC. Now I'll have my closing balance, and this is closed. Right, students? Is this fine? I'm just making the font smaller so that if somebody wants a screenshot, you may just take a screenshot of this. Fine, students? Great. Okay. This sum, I'll only give you journal. We'll discuss the journal entries because it is copy paste of the previous sum. So now here you have opening balance of SLC, WIP, finished goods, and also you have opening balance of factory overheads. This is a credit balance. So either it is representing last period's under or absorption difference which is carried forward, or it is representing the outstanding in this particular account. Fine. And then you are having the CLC balance. Again, had this balance not been given in the question, let us say the question is not mentioning this, still you can find out CLC, or rather you will have to find out the CLC opening balance. How? This total minus this. And if you just check this on your calci, the total of all debits minus the total of credit balance, whatever is given, your answer will be this. Fine, students. So remember this. Even if the CLC balance is not given, you have to find it yourself by taking the difference of debit credit. Balance is given, right? Okay. Now, let us go to the transactions. First is finished product at cost. Give me the entry. Srini beta, if you want any specific question, you let me know, because the questions which I'm covering are all exam questions only. If you want, you can just let me know. I'll take that question also, Srini. No problem at my end. Yes, Bhumika. Okay. Good. Swati, good. So see, finish product at cost. See, again, understand the transaction, automatically your entry will be right. It represents, so Srini, you may just post me the question numbers, huh? Not a problem, I'll take that. Because I've purposely taken the exam questions because I feel they will be more helpful, right, beta? And anyways, the entries would be similar, and you can always ask me the doubts if there is anything different in the module, right, beta? So finished products at cost. It means what? It is the finished goods which are completed and transferred from factory to warehouse. So if it is transferred from factory to warehouse, so warehouse has to be debited, which is finished goods account, and factory has to be credited, which is your WIP account. Right. Good. Kiran. Now, manufacturing overheads incurred. Yes, Bhumika. Correct. So it is manufacturing overheads account to CLC. Perfect, Swati. Very good, Om. Really, no problem, beta. What you can do is, we'll first take the exam questions from this sheet, and whenever you go home, na beta, just refer to the module and mark your doubts. You may ask me in the regular batch whenever we do this, right, beta? Raw material purchase, correct, Om? Perfect, Swati. Factory wages and indirect wages we will club. So it will be LCC to CLC. The total comes to 72,195. Correct. So my first entry is LCC to CLC. This is for the incurred part. Now I also have to pass the entry for the charging part, right? For charging part, my entry would be WIP debit by the direct amount, factory overheads debit by the indirect amount, and to LCC by the total amount. Superb. Very good. Correct. Om, Bhumika, Kiran, all are right. Perfect. Give me entry for this. Good. Very good. Om, Swati. Right. Anybody else? Bhumika. Very good. Others, if you'd like to. So when goods are getting sold, as I said, please visualize what is happening. The goods are moving from your stores to the customer. So customer's account is debited, which is represented by COS, and stores is credited, which is represented by this. Correct, Kiran? Yes. Next, material issued for production, which represents direct. Very good, Om, Swati. So it will be WIP to SLC. Now this is interesting. This is the only entry for which I have taken this sum. Let me tell you, be very frank. This is the only entry for which I have taken this sum. Now, whoever gives the right answer gets a chocolate. So Bhumika has the first chocolate. Om, this is not sales return at the selling price. So it cannot be routed from the P&L because P&L has the sales value entry. Swati, factory is not involved here, so we cannot use WIP. So chocolate is okay. Good. See, there is a return. Who is returning? Customer is returning. So customer has to be credited. And if goods are getting returned, they will come to your stores. So stores is getting it. See, simply it is exactly the reverse of this. When goods are sold at cost, the sales return at cost will be exactly opposite of that. So it is FG to COS. Superb. This entry, I'm sure it is simple. It is materials returned at cost. So it is supplier's account debit and materials account credit. Overheads charged. Factory overheads are charged to the factory. So factory account debited and factory overheads account credited. Correct? Sales entry, which is they have given directly net of returns. So what will be the sales entry net of returns? Okay. Kiran? Acha, you are giving me the previous entry. Fine. Give me the entry for sales net of returns. Correct. So debtors is debited and cost P&L is credited. Good. Perfect. Let us proceed. Now let me take a interesting sum. Yes, this one. This sum is very interesting. It has some very interesting adjustments, some new ledger accounts. So let me take this. So a company operates historic job cost accounting system. It is not integrated. Anyways, we understand from the opening balances also that it cannot be integrated. Now, they have given you opening balances up to this point, and then they have given you details of the entries. So let us start. Now, there are some new accounts in this sum. First is the building construction account. So what is this account? Let me first explain. In this particular account, when you are yourself constructing your building, it may be in some other case, some other asset like machinery also. So till the time the building is under construction, you open a separate account, which is the WIP account for that asset. So it is called as asset WIP account, or like here they have named it, it is the building under construction account. So let us first understand what the particular transaction means, right? Now, okay, let me prepare these accounts. This is question number 4. So you have SLC, you have LCC, yes, you're right, Srini. A building under construction can also be called as capital WIP. So different people may name it differently. So factory overheads control. I think here also selling and administration is combined into one. Yes, selling administration is combined into one. Then you have WIPC, you have FGC, you have COS, and you have cost P&L. Now you have your, now here in this sum they have named it at GLA, that is general ledger adjustment account. So I'm also calling it as GLA. You can call it as CLC also, that is fine. And I have that building construction account. You can call it as capital WIP also. Fine, students. So let us post the opening balances. So the figures are rupees in lakhs. So it is 80, 20, 430, 80, 20, 430. Building is 10 and this is 540. Fine, students. Now, material purchase, material issued to production entries are simple. So 40, 50. Purchased it CLC. This is WIP. So WIP, and here by SLC. Fine, students. So material purchase, material issued for production. Now, for general maintenance and for building construction, this is something new. Now, when they are saying for general maintenance, it means this material is indirect. Now, since they are saying maintenance, I'm assuming it to be maintenance which may be required by machines and all. So I'm posting it to factory overheads, right? So this is representing indirect material, hence it is going to overheads. And since it is saying maintenance, I'm treating it as maintenance of machine, so I'm posting it to factory overheads. So 6 and building construction material used is 4. So 6 and for building construction material used is 4. Now all this has gone from the material account. So for everything, material will be credited. Correct? Now comes the interesting part, wages. Now again, this represents the debit entry, gross wages paid. Sorry, not both. 1 second. The word used is gross. So gross means it is your total, all direct, indirect, everything. So this total is 150. So this will be debited. Correct? Now comes the interesting part, students. Please pay attention. This is going to be interesting. What it says, out of the gross, indirect is 40. And for building, you have used wages of 10. Correct? I hope this is clear to all. So I repeat, out of gross, indirect is 40 and for building you have used 10. So by building 10, by FOC 40, 40, 10. Yes. Very good, Swati. So now what is special in this sum, why I took this sum out of the all available is, now generally as we all have seen, labor account should tally. So debit, if you have paid 150, credit should be 150, but you have found that for building 10 is used and for indirect, that is for factory, 40 is used. Now there is a balance of 100. Very good, Bhumika. So this is what we have to understand by ourselves, that this should represent direct because that is the main wages which is left. So Bhumika and Swati, you both are correct. So this is the direct wages balancing figure. As I said, na, you'll get balancing figures. So this is direct wages, which will be transferred to WIP. I hope this is understood by all students, right? Now, similarly, overheads. The total amount incurred is 160. So 160 incurred is 2 CLC. Right? Now again, the interesting part. See, what they have said, out of this, what is absorbed in building construction is 20 and what is under absorbed is 80. Sorry, 8. So out of this, building construction is 20 and under absorbed. Now under absorbed, I am transferring to cost P&L 8. To FOC representing under absorption and the building construction. So students, anything you are able to figure out from this? Now the overheads has 6 coming from material, 40 coming from labor, and other expenses incurred is 160. And the overheads are applied for building construction. This is under absorption. Normally, we find under absorption as the balancing figure. So something is missing. Very good, Swati. Very good, Om. So what is missing is the main thing, that is the overhead that we charge. And where is the overhead charge? It is charged to WIP. Yes, the balancing figure comes as 183. Yes, very good, Bhumika. So I charge it to WIP account. Swati is saying it is 178. No, actually, 1 second. I think there is one transaction left. Yes, there is something left, beta. That is why it will come to 183 later. So let me not find the balancing figure as of now because some adjustments are left. So let me keep it pending, beta. But just to inform you, it is the figure of main factory overheads. But amount, let me keep it pending. So Swati, you are right. If I'm making the calculation now, I'm getting 178. Fine. Now, coming to something new, royalty paid. What is royalty? Royalty, as we all know, is a direct expense. Now, students, please remember, we have not opened a direct expense account intentionally because as you will find, even in cost sheet sums and even here, direct expense is something which appears rarely in real life also, and hence in sums also, they give direct expense very rarely. In this case, we do not open the direct expense account. It is directly that we charge it to WIP because anyways direct expense is charged to WIP, and we also pass the entry for its incurrence. Yes, Ayushi, perfect. So the entry is WIP to CLC for direct expense. So we pass this entry for direct expense to CLC 5 by WIP 5. So for any direct expense, remember the entry is WIP debit, CLC credit. Now the entry for incurring of these overheads 25. Then the entry for sales 450. Great. Now coming to some other adjustments given. Now again, this is going to be interesting. Pay attention. At the end of the month, so they are giving you the closing balance for raw material for WIP 55 and 25. So they are giving me buy balance 55, buy balance 25. So it is 55 for material, 25 for WIP. Now they have mentioned the loss arising in the raw material is to be treated as factory overheads. If this sentence would not have been given, then whatever loss is arising, I would have transferred it to cost P&L considering it as abnormal loss. But here they mean to say it is not abnormal loss. It is a normal loss relating to indirect material. And if you study the material chapter, you will find that the loss arising from material, if it is of normal category and if it is of direct material, it is charged to product. But if the normal loss is for indirect material, it will be charged to overheads. That is what they have given. So now I balance the material account 80 plus 40, 120. This is 60. This is 55. So this is 1 15. So there is a difference of 5, which as per the instruction goes to factory overheads. And hence in my factory overheads, I have this one more entry of 5. Is this clear to all? Now, another interesting point. The building under construction was completed. What should I do? If the building is completed, what should I do? Now, till the time the building was under construction, I was showing it under a separate account. That is the building construction. Very good, Ayushi. Very good, Swati. So till the time it was under construction, I was showing it under construction account. Now, since it is completed, it will go to the asset account. And our asset account is represented by CLC. So I will transfer this to CLC, which represents my assets. So 20, 30, 40. So it is 34. Sorry, 44. Correct, na? So 2 building construction 44. Then another new transaction. The company's profit margin is 20% on sales. So this is why I selected this sum, because it has so many new transactions. Correct? Now, what do I get if I deduct from sales the GP? That is a gross profit margin. Now the sales given are 450. GP margin is 20% on sales. So 20% of this comes to this. I get 360. What does this 360 represent? Swati, you're right, but cost of what? It represents, yes, one of my entries, which is cost of goods sold. So when I deduct the profit margin, what I get is cost of goods sold. And this cost of goods sold, as we all know, the entry is COS account debit to FG account, because this is going from my stores to my customers. So see here, they have given a simple entry in a new manner. So by COS 360, na? Yes. 360. So see, that is the beauty, that maybe the transaction is same, but you are given it in a different manner. I hope it is clear. Any doubt, students? No? Should we proceed? Anything left? No. Perfect. So let us now close our accounts, whatever are left. So I closed SLC. I found this balance of 5, which is representing loss. And as per the specific instruction, I've transferred it to overheads. So this account is closed. Labor was already closed. Now the overheads. Now when I total this, the balance that I get for WIP is 183. This no instructions are given, so I transfer it to cost P&L. Couldn't just give me a minute. So this is how I've closed the accounts till now. Proceeding further. Now again, interestingly, here they have given you closing balance. So now what will I get from this account? I will get the finished goods which are transferred to FGC. Yes, Swati, you're right. So I'll get the finished goods which are completed. So it is 283, 283 and 70 is 353, 358. So if it is 358, is it 3333? Just confirm. Great. So now what I'm left with is 7, it is 403, correct? This will go to cost P&L 360. To COS 360. Now from my cost P&L, I'll get the figure of profit or loss as the case may be. So 450 sales, 360 cost of goods sold, which is transferred here, and then 25 relating to under absorption, 25 relating to selling and administration. So 33, 393. So I get the net profit 57, which will go to CLC. Correct? And then I get the balance, closing balance. I hope this is clear to you all students. Anybody, any questions or doubts? Yes. Any doubts with anyone? No? Should we proceed, students? Can you, Ayushi, I didn't get your question, beta. Which question you want me to take? Ayushi, which question you're asking me to take? 4-1 from GP working. Can you just please unmute and tell me? So GP working I have shown na beta. Let me know your doubt, please. Which GP working you are saying, Ayushi beta? 4-1. Okay, good. Fine. Now, see, this is a question for integrated, which is exactly like non-integrated, with the only difference that instead of now CLC account, you will be opening these respective accounts. So slightly your time consumption is more, but generally institute in exams sparsely ask this question, because practically also in real life, the more practically followed method is always non-integrated. And since now only half an hour is left, let me take you to the next important part in exams, that is reconciliation. So let me take a few sums on reconciliation, the different variety of sums in reconciliation, so that we complete everything which is relevant for exams majorly. Now, this reconciliation is what? It is reconciliation between profit or loss as per accounts and profit or loss as per your P&L. Now you'll say, sir, what is the difference? So this is one, you are getting profit as per your cost accounting books. Another, you are getting profit as per your financial accounting books. Now in cost accounting books and financial accounting books, what is the difference? Cost accounting books are prepared on the basis of the figures of cost, that is the figures which are charged. Financial accounting books are having figures which are incurred. So there would be a difference between cost accounting books and financial accounting books of the expenses as far as they are charged and incurred. One. Second, the second reason of difference between the profit as per cost accounting books and financial accounting books is that there are certain items which appear in your financial P&L. Like you have items like preliminary expenses on the debit side. Then you have items like rent received, interest received on the credit side. Now these are all pure financial transactions. Again, on the debit side, you have bad debts written off. Now all these things do not come into account in costing. Costing never considers your sundry incomes. Also, costing is least bothered with financial transactions like preliminary expenses written off or bad debts written off. These do not find place in costing. Now, these are finding place in your financial books. So obviously the financial profit is impacted by these, but these do not find place in cost accounting books. So definitely the cost accounting profit is without impact of these items. So this is reason number two. And third reason is that the values that you get of your stocks. So the value of stock is different in cost accounting books and in financial accounting books for the obvious reason, if the expenses are different, which is my first point of difference. If expenses are charged in costing books and in financial books, we are considering the expenses which are incurred. So here itself, since the expense amounts are different, so obviously the stock valuation, which is coming from the expense figures only, has to be different. So again, you will find difference between the stocks. So broadly, these are the three reasons which leads to difference between the figures in financial and the costing. Now, what we used to do in standard 11 and 12 relating to bank reconciliation, similar concept we are going to do here. We are going to do reconciliation of profit shown by cost books vis-a-vis profit shown by the financial books, right? Yes, beta. Srini, one, it is done whenever the books are maintained under integrated accounting system. Second, they are done whenever you are comparing profit of cost sheet with your financial books. So even it may happen in case of non-integrated accounting and even in case of integrated accounting. So when you are comparing profit shown by your cost sheet, because if you remember cost sheet, even cost sheet shows profit, compared with profit shown by the financial profit and loss, which we normally call as profit and loss, which we have been preparing from standard 11. So those two profits can also be compared. Or when your books are maintained on non-integrated system, then also the profits which are different in financial books and in costing books will be compared. Correct, beta? Now, if this reconciliation is required, how to do reconciliation? And second, what is the format? Now, one is we all know the reconciliation statement format, which we have been doing in our early commerce days. So first is reconciliation statement. Now we all know what is the format for this statement. Let us say you are taking starting point as profit as per cost records. So this will be the amount given. Then whatever you feel has to be added and whatever you feel has to be subtracted will be adjusted. In the inner column, you will take the values. Total of both addition and subtraction will be posted outside and you will get the figure of profit as per financial records. Right, students? This is one format. But generally at our interest level, they ask you to do the same thing in another format, which is called as Memorandum Reconciliation Account. Where you have to do the same reconciliation using a ledger format. Now this is very simple. Firstly, if you have the balance, opening balance of profit, we all know profit has a credit balance. So we will write it here by profit as per costing books. Now, whatever you have identified as those entries or those differences which have to be added, you will post it here. So automatically what you are putting on the credit side will get added to the original figure. And whatever you have identified as subtraction, you will post it here. So automatically whatever you are putting on the debit side will get subtracted and then the balance will appear as the closing balance. So profit as per financial books. So this format is also simple. Once you have identified the plus and minus, so the plus will be posted on the credit side, minus will be posted on the debit side. Now, let us say in the question, the opening balance is not a profit, it is a loss. Then what you will do, you will start here to loss as per costing books. Now here, whatever you have identified as addition will be debited, so that can be added. And whatever you have identified as subtraction will be credited. And then if the balance is a loss, your answer will be by loss as per financial books. So it depends upon what is the opening balance, whether it is a loss or a profit. Correct, students? Now, in this case, the opening balance is profit, and they have asked us to prepare by the reconciliation account format. So we will follow this. In fact, at this level, if nothing is mentioned, still you should follow this. So by profit as per costing books, 145,500. Fine, students. Now comes the most interesting part. What has to be added? What has to be subtracted? How to identify this? For this, I use this format. What is this format? This hand represents cost profit. This hand represents financial profit. So cost profit, financial profit. Just remember this. Now, pay attention to the entries or the differences which are given in the sum. Work overheads under recovered. What does it means? What does under recovered or under absorption means? It means that the expenses are incurred more, incurred which is in financial books, and charged less, which is in costing. So when the word is under absorbed, under recovered, under charged, it means what? The expense, whatever expense, like here it is the overheads, factory overheads, that is higher in financial books, where you put the figure of expenses incurred, and they are less in costing, where you have put the figures of expenses charged. Now understand this. In costing, the expense is less because it is undercharged, right? Now, if the expense is less, what will be the impact on the profit of costing? Whether it will be more or whether it will be less. You may put in chat box more or less. So I repeat, first you understand the transaction. So the work overheads are under recovered, under absorbed. Under over absorption happens in costing. Under absorption or under recover means the expenses are less in costing. Now, if expenses are less in costing, what will happen to my profits? My profits would be more, as correctly pointed out by everyone. Because if the expense is less, the profit is more. Now, my reconciliation is starting from costing balance. So they have given profit of costing, which is more as compared to financial. So now to do reconciliation, I have to come down. Come down means I have to subtract. So this item will go in subtraction. Similarly, taking the other case, administrative overheads is also under absorbed. It will also go in subtraction. Selling overheads are over absorbed. Now, what does over absorb means? Over absorb means the expenses are more in costing. Now, if expense is more, which is called as over absorbed, over recovered, it means the costing profit should be less because the expense is more. So the costing profit is less. And you are going from costing profit to financial profit. So you have to climb up. So you will add this difference. I hope this is clear. Correct? Now, next transaction is bad debts. Now, bad debts is again an expense item which appears only in financial books. In costing, we don't have bad debts. Now, what will be the impact if this expense is there only in financial books? What will happen to my financial profits? More or less? See, this is an item of expense, and this expense appears only in financial. So what will happen to my financial profit? Since this is an expense only in financial, my financial profit is less. Now, my starting point is costing profit. I have to climb down. So what I will do, I will subtract. Correct? Now interesting again, overvaluation. It is overvaluation of opening. Opening is a debit item. Now, if my opening stock is overvalued, what will happen to profits? And where it is overvalued in costing. So what will happen to my costing profits? Whether it will be more or it will be less. See, opening stock is a debit item. We all know. And if it is overvalued, it means debit is more. And if debit is more, profit of costing will be less. So because of this, since this figure is more, that is overvalued in costing, my costing profit is less. I have to climb upwards. Add up. Again, what they are saying, overvaluation again of closing stock in cost accounts. Now this is closing. Closing is a credit item. Now if credit is overvalued, what will happen to my profit, more or less? Now credit is overvalued in costing. So my cost profit will be more because credit is overvalued. If credit side is overvalued, the profit will increase. I have to climb down. So I'll subtract. Now, these two items of income, these are two income items because one is interest earned. Read very carefully whether these are earned or whether these are paid because the answer will change. These both are earned and received, so both are revenue items. Now, if both are revenue items, then what will happen? Now, please understand, both are revenue items which appear only in financial books. So what will happen to my financial profits? What will happen to my financial profits? My financial profit would be more or less? Obviously, it will be more. And I'm standing at costing because my starting point is costing, so I have to climb upwards. Similarly, preliminary expense is an expenditure only in my financial books. If it is in my financial books, so my financial profit would be, I have to climb downwards. So by this, I get to know what are the addition items, what are the subtraction items. Now, what are you saying, beta? In memorandum reconciliation account, sir, if starting point profit is as per costing, then debit less credit plus financial account same, then debit or credit will be same or opposite. Sorry, but Bhumika, I'm not getting your point clearly. See, I think I've given a very simple method of handling this. So I'm not getting into the debit credit because there can be profit as per costing, there can be profit as per financial. In either case, both will come on the credit side of the memorandum P&L. Correct? And if there is loss as per costing or loss as per P&L, both will come on the debit side. Because when we are preparing this memorandum, the starting point, whatever it is given, financial or cost, if it is profit, it is credit. If it is loss, it is debit. Simple. Remember this. Now I have these additions. What is my first addition item? Selling overheads over absorbed. So I will write by selling overheads over absorbed. What is the figure? 19,500. Then I have overvaluation opening stock. Opening stock overvalued in costing books 15. Then I have two incomes 3, 7, 50, 27. Interest earned. Then I have preliminary. No, that is less. So I've taken all add items, then I'll come to the less items. So work overheads under absorb, administration overheads under absorb. So it is 9,500, 22,750. Again, I have bad debts written off. 9,000. Then I have closing stock. And then I have preliminary expenses written off. So the balance will be my profit as per financial books. How much is this profit as per financial books coming? 144. Good, home. 144. Okay. Very good, Swati. Fine, students. Now let me take you to another type of sum in reconciliation. The other type of sum is this. Now, what is the difference between this sum and the previous sum? In the previous sum, the reconciliation items were ready-made. They had already mentioned what items would be coming in reconciliation. Here, you have to identify the reconciliation item first and then do reconciliation, right? Now, they have given you the trading P&L account. So as you can see, you have the trading P&L account. Now, first I identify those items which will not find place in your costing. So on the credit side, it is these items. On the debit side, it is this item. So these three items are such that they are only present in the financial, not finding place in the costing, right? Now, interestingly, you have profit of financial also. You have profit of cost also. You can take any one of them as your starting point. So let us say in this sum, I take financial as the starting point. So first sum I solved where costing was the starting point. So in this sum, I'll take financial as the starting point. So profit as per financial, which is 2,03,000. Fine. Now, we'll identify additions and subtractions. Firstly, for these three items which are not present in costing. Now, let me come to this. Now, both these are income items. Same. Both these are appearing only in financial books. So what will be the impact on my financial books or financial profit because of both these items? Whether my financial profit would be more or less by these items? Yes, students. Perfect. Since these are income items and they are appearing only in financial books, my financial profit would be more. Now, here in this sum, my starting point is financial profit. So I have to climb down. So both these items have to be now subtracted. And as the case is, obviously this item will have to be added because this is a debit item. It is appearing only in financial books. And if it is appearing in financial books, the financial profit has come down because of this debit item. So I have to go upwards. So I will add. Fine. Now coming to some other adjustments. It says in costing books, the closing stock value is 40 to 800. Now, in the previous sum, they had directly given you under overvaluation. Now, this is where this sum is different, and that is why I've taken it here. This is the second type of sum which you may get. So one is directly they will give you difference. Second is you have to identify the difference. Now, in this sum, you identify the difference by comparing it with the closing stock value given in financial books. It is 4,800 and it is 42,800. So if I have to put it in words, I will say it is overvalued in costing books. By what amount it is overvalued in costing books? It is overvalued by 2,000. Now again, if closing stock, this is a closing stock item. If closing stock is overvalued, what will happen to costing profit? Closing stock is overvalued in costing. What will happen to costing profit? Perfect. It will go up. My starting point is financial. I will add. For this also, my adjustment is add. Now, the work overheads in costing is 100% of wages. How much is your wages? Wages is 1,05,000. So in short, in costing books, this amount is 1,05,000. Whereas in financial books, it is 121. So there is a difference of 16,200 300. What is this 16,300? It is more in financial, less in costing. So I will say it is under absorbed. Correct? Similarly, for selling overheads, it is saying it is 10% of sales. How much is sales in financial? 750. So 10% of sales would be 75,000. And the difference is of 4,000. Here, costing is more, financial is less. So this 4,000 is over absorbed because it is more in costing. And then it is saying it is 1 per unit. So how many units are there? So it is given that 50,000 units are there. So it means this amount is 50,000 in costing books, whereas here it is 53,400. So it is again under absorbed by 3,400. Correct? So I get the difference of overheads. One is over absorbed, the other two are under absorbed. Again, let us check. I'm first going by under absorbed. If an expense is under absorbed means the expense is less in costing. What will happen to costing profit because of the under absorbed? Yes, students, what will happen to my costing profit because of the under absorbed overheads? My costing profit would be higher because under absorbed means the expenses are less. That is why it is called as under. Less where absorption is always happening in costing. So if they are saying under absorb, it means it is less in costing. If it is less in costing, so my costing profit is more. Correct? Now my starting point is financial. I have to go upwards. For under absorption, my answer is add. So obviously for over absorption, my answer has to be less. That is obvious. You need not spend time on identifying. Correct? And then they are saying depreciation in cost accounts is 8,000. Okay, so 1 second. I was assuming they have not charged, but they have charged. So it is 8,000 here in costing, 11,000 in financial. So again for a depreciation, there is 3,000 which is under absorb. And for under absorb, we have already identified the treatment that is to be added. So in this type of sum, what we have done, we have compared the values and then found out the difference. So the difference between the previous sum and this sum, these are the two type of sums that you get in reconciliation. Either the differences are ready-made given as happened in the previous sum, or as is happening in this sum, you have to compare the figures, maybe one or two figures, you have to do small calculation, find out, and then compare to find out the difference. So first step is finding out the difference, and then the second step is identifying add or less. Now, once all this is done, now my answer is simple. I'll put it in the reconciliation format, and I will get my figure of profit or loss. And anyways, here you have the other profit or loss also, so you can always compare. Students, did you understand both these sums for reconciliation? Any questions with anyone relating to any of these two sums before I proceed? Correct? Now again, cost profit RHS, financial profit LHS. Why, beta? See, why are you saying RHS, LHS? Because again, beta, in memorandum reconciliation, you have to first see what is the starting point. Starting point, whether it is costing profit or financial profit, it will always go to the right hand side only. So I cannot say beforehand that costing profit is RHS and financial is LHS. Whichever is the opening balance, and if it is of profit, it will be RHS. Right now, you take R right hand as cost profit. No, beta. In this sum, I have taken starting point as financial profit, if you remember. And if my starting point is financial profit, now I'll be preparing my reconciliation account by putting financial profit on the right hand side because I have taken starting point as financial profits. So this is what is important, Om. There is no fixed rule that costing profit will always be on the right hand side. Whatever is the starting point will be on the right hand side and assuming it is profit. So here I have taken starting point as profit of financial. So I put profit of financial on right hand side and all add I'll put here only. Whatever add I have identified, I'll put here only. Om, is this clear? And in fact, is it clear to everyone? Om, any particular doubts, beta? Still pending at your end? Fine, students. Now, let me take you to a very interesting sum. Maybe you may get this type of sum, I don't know. But this is a sum which is possible in exams. The only difference is now the question is of loss. Now you'll say, sir, what a big deal. Actually, there is no big deal. But still, when it comes as a loss, we have to be the question that the students may ask, sir, now what will happen to add and less? Whether we have to make it the other way around, whether we have to make it ulta pulta. Don't do anything ulta pulta. Follow this rule only. How to follow? Firstly, now if the opening balance is net loss, whatever is my starting point, I'll put it on the debit side. This is important. Now, interestingly, they have given both as per costing also, as per financial also. You can take any as the starting point. Let us say I'm taking starting point as costing. So now when I prepare the reconciliation account, and I'm taking starting point as costing loss, so I will write it on the debit side to loss as per costing books. How much it is? 572. Now again, since the sum has both financial loss also and costing loss also, had I decided to take financial loss as my starting point, I have put it here, then I would have taken loss as per financial books here. So there is no fixed rule that costing will come on right hand side or financial will come on left hand side. There is no such rule. It depends upon one, whether it is profit or loss, two, whether it is whether it is profit or loss, that will decide. So if it is loss, whatever is the starting point you are taken, whether costing or whether financial, it has to come on the debit side. So let us say, as I said, I'm taking costing as a starting point. Though both are given, I can take any one of them. I've decided to take costing. It will come as my starting point, and since it is a loss, it will come on the debit side. Now coming to the interesting question of add and less. We will follow this only. I will not change the method so that there is no confusion. So what is this method? Again, what it says, factory overheads over absorbed. Now please pay attention. Again, this is costing, this is financial, correct? Pay attention. Over absorb means expenses are more in costing, right? Now my question to you is, please pay attention. If expenses are more, correct students? Expenses are more, what will happen to my costing loss? Because now both these hands represent loss. So if it is loss, we will talk in terms of loss. It is overabsorbed. Overabsorbed means the expenses are more in costing. So my question is, what will happen to costing loss? Yes, it will be higher. Now I have taken starting point as costing loss. So I'll have to come down. So less. So I have not done anything ulta pulta. Normally what we used to do in bank reconciliation, if the opening balance is positive, you do this. If the opening balance is negative, you do exactly ulta. Correct? I don't believe in ulta pulta. Simple. Now we'll compare this from the perspective of a loss. Correct? Same thing again. Administrative overheads are under absorbed. Under absorbed means the expenses are less in costing. Now, if the expense is less in costing, what will happen to costing loss? So firstly, under absorption means expenses are less. First, be clear with that, and then check the impact on the loss. Now, if the expenses are under absorbed, means the expenses are less in costing. So what will happen to costing loss? Costing loss will be less. Correct, na? Costing loss will be less. My starting point is costing. I have to add. Now they have given depreciation. One is as per financial 220, one is as per cost. So it is 25,000 difference, and it is over absorption because the costing figure is more. Now again, if the expense is more in costing, costing loss is higher. Again, my starting point I've taken as costing. I'll come down less. Now, again, interest on investment is an income. Transfer fees credit is an income. Stores adjustment credit is an income. So these three are those financial incomes because they appear on financial books. We don't record any such thing in costing books. Now again, pay attention. These three incomes are appearing only in financial books. What will be the impact of this on your financial loss? What will be the impact of these three items on your financial loss because they are appearing only in financial books? Perfect. Financial loss is less. Very good. Now, since your starting point is costing, you have to climb down. So it will be less. It will be less. Less. Same thing. Income tax provided is an expense. Interest on loan is again an expense. Now, both these are expense only in your financial books. What will happen to financial loss? What will happen to financial loss? Perfect. My starting point is cost. Right. Done. Now, whatever I have identified as add, I will put it on the debit side because now my starting point is a loss. So to administration overheads under absorbed. Correct? So this is done. 24,000. Then income tax and interest on loan. 154, 263. 263. Income tax provided, interest on loan. Correct? Then coming to the less items, less would be then now put on the credit side. So depreciation difference, factory overheads over absorbed, by factory overheads over absorbed, depreciation over absorbed, 16 and 25, interest, $64, transfer fee stores, 64, transfer fees stores adjustment. So I will get my loss as per Financial books. Close. So students, be clear with this. The reconciliation part. It is a very commonly asked part in your exams, and it is important, and it is also easy and scoring according to. Right? So, anybody having any further questions? Because I have completed from my end. Yes, definitely there are many sums which you need to take up from module, maybe any other source like a MTP, RTP. Please practice. And whenever we meet again, you may raise your doubts with any of your previous question. Thank you, Srini. Yes, students. Thank you, Om. So let us catch up soon. Till then, please keep practicing costing FM. These are the two technical topics according to me, which requires good practice to have a command so that you can do well in exams, complete within time and with accuracy. So please practice both these subjects thoroughly, and we are always available at BOS for all your problems. You may put it in the questions, or you can write it to them, and your problems we will try our best to resolve. So thank you, students. Please take care. Enjoy the festival seasons and also study. Thank you. Bye-bye. Thank you, technical team.